Welcome back. Let's get some management conversations going. Galaxy Surfactants, that is the first management on the show. The stock has surged 21% in last year. Recently, management cited that Indian demand continues to grow. Centrum has upgraded the stock to an add from a reduce with a revised target price of 3,331 rupees per share as well. This and more we'll discuss on the conversation now. We have Mr. K Natarajan, the MD of the company, joining us now. Mr. Natarajan, good afternoon. Thank you so much for joining in. Well, you know, one of the things that Centrum mentioned in its note is that you're looking at newer categories, newer product additions. I wanted to talk to you about that right now. What are the current revenues coming in from newer products? Which are the new categories that you're tapping in? Are these high margin products, and which segment do they fall in?
Yeah, so what I had essentially even expressed during our last engagement and also during my investor call has been in terms of how the projects in pipeline with regard to our special ingredients is gaining traction with all our customers in the US and the Europe after a brief period where they're suspended due to the inflationary pressures in the geographies there, and as also due to consumers down trading. So with the inflation coming down, we do see that picking up. So that's going to be something that will reflect in the S2 results. Second, also that we are looking at certain products that we will start launching, which is coming out of the innovation pipeline. One of it we already launched in April in cosmetics Europe. We will have more coming in, but then they would be in line with what is the state of maturity in the innovation funnel.
Okay, Mr. Natarajan, you know, you've spoken in your earlier call about getting into the mild surfactants segment. And, you know, Centrum also has mentioned that actually it has gained quite a lot of traction from MNC clients. Can you speak about this particular segment? What is the kind of response that you've been getting from MNC, and what kind of orders are you getting from there?
So mild surfactants has been in a portfolio now for the last about 7 to 8 years. But with the recent trends, consumer trends in terms of consumers wanting and preferring milder cleansing and moisturizing formulations, we have been expanding capacities in line with the way the demand is growing and accessing newer geographies and more customers. So this is something that we service out of both our India plants and the Egypt plants. So we do see consumer trends moving towards using more and more milder formulations, and consumers are getting pretty aware about what sort of ingredients are getting used in the formulations, and that is good in terms of the way that we are seeing this market growing.
So, Mr. Natarajan, I wanted to understand, you do have around 70% capacity utilization the last time we spoke. With the newer products being added, will you be using this capacity? Is it fungible, or do you need more capacity addition for these segments?
There are some of this we've already expanded, and we have put the capacity in the last 2 to 3 years. Many of these capacities are certainly not fungible, and the capacity utilization numbers will not go up immediately because you tend to invest with a 3 to 5 year range in terms of the demand that we are planning. So they will reflect progressively. But yes, we do see some of the projects in pipelines getting matured over the next 6 to 9 months, and we will see if required whether we need to be looking at certain debottlenecking of these capacities as well.
Mr. Natarajan, you know, let's talk about the actual realization and also the EBITDA per metric ton. Now, freight costs, you know, have seen quite a bit of a rise in the last couple of quarters. Currently, how do they trend? Will you see some margin pressures because of this inflation that you're witnessing, or has it tapered down? So Q2 and rest of FY25, how do you see margins panning out?
We had said margins, we would essentially be in the guided range that we had talked about, 21,500 per metric ton that we had guided the market to. So I'm not allowed to comment specifically on what it will be for the next quarter, for this quarter. But it's suffice to say that it will be in the guided range. The other one with regard to the freight cost is that freight costs, more than cost, it's in terms of getting on-time deliveries to customers and the service levels improving. We do see over the last about 2 to 3 weeks, we are seeing some green shoots in terms of availability getting better, of containers and sailings are more predictable. But then on freight rates, we're not seeing any great reduction, although we do see some minor reductions in some sectors. But moving forward, what is critical is, we need to have the certainty in terms of container availability and the sailing schedules being more certain than what it has been over the last 6 months. Probably we may have to wait for another month or so to understand whether we have a trend which says that things are improving for the better.
So what happens in this case, Mr. Natarajan, because you still have 6 months to see what happens next, and freight rates, they have been going up. Are you able to pass it on to your customers? And secondly, does it impact the import prices as well for your raw materials? How are you navigating that?
Oh yeah, so typically the freight rate increases and the service level issues impacts both incoming and outgoing. And then we obviously pass on the increased freight rates both on the incoming and the outgoing, but it happens with a lag. So which obviously is something that you cannot avoid, because you can't be changing prices every week depending on how the freight rates are moving. So it always does get passed on with lag of a quarter, and as long as things get better in terms of the service levels and the freight rates remain stable, I think it's a good situation to be in. And then yes, once it starts coming down, then you need to have a secular trend of it going down, not absolutely volatile in terms of the way the freight rates move up and down. That's not good for anyone.
Understood that. Thank you so much, Mr. Natarajan, for joining us and giving us clarity on all of our questions. Let's now slip into a short break. Devan Jain from Inox GFL Group joins us next to discuss their business outlook and more. Stay tuned.